Welcome back to Investing Talk podcast.
Today we're looking at Ondas Holdings.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. And I think the only place to really start here is with the operational performance.
Right.
I mean, when you see a growth number this large, you have to pay attention. We're seeing what looks like a radical revenue inflection.
And that's mostly coming from their Ondas Autonomous Systems division.
Exactly. It's the main driver.
Radical doesn't even begin to cover it. The latest numbers are, well, they're almost unbelievable.
They are.
For the third quarter of 2025, revenue jumped to $10.1 million, and that's a 580% increase year over year.
Just think about that acceleration.
It's like going from a slow crawl to, supersonic speed almost instantly.
And that speed is translating into rapidly changing expectations for the future.
Yeah.
I mean, the company had previously guided for, what, $25 million for the full year, 2025?
Yeah, that was the old number.
They've now blown right past that. They've raised guidance to at least $36 million.
So that's a 44% increase in their own expectations in just a single quarter.
It is. And it just speaks to this extreme confidence they have in their sales funnel and their ability to deliver.
Okay, but that's the short term. The part of the story that feels like a real high-stakes bet is the 2026 target.
That's the number that changes everything.
They're signaling a minimum of $110 million in revenue for 2026.
It's huge.
Yeah.
And when a company projects nearly tripling its revenue in 1 year, that's not just an outlook. It's management drawing a line in the sand.
They're staking their credibility on it.
Absolutely. They're betting on executing these huge, complex defense and industrial contracts. So that forces us to ask, what's justifying this ambition?
Exactly. Because if you're trying to sell me on a $110 million target, I need to see confirmed business, not just, hopes and dreams. What's actually fueling this jump right now?
Well, we're seeing a really significant shift from these smaller trials to established multi-million-dollar commitments.
Okay.
We're talking specific orders like the recent $2.7 million for their Iron Drone Raider systems.
And what are those for?
They're designed for autonomous inspection and security. And then there's another $3.5 million for their Apero unmanned ground vehicles.
And the big one, the anchor contract that really validates the tech. That's the $14.3 million order, right?
Right, from a major defense customer for the Optimus drone systems. That is serious validation. These aren't small deals.
No, these are high-value contracts. It shows they can scale production and meet the really rigorous demands of defense.
Precisely. And it's not just about the dollar amount here. It's about the customer commitment. These relationships take years of regulatory and, technical approvals.
So winning those big deals suggests they're kind of graduating.
Yes. From a promising startup to an entrenched, trusted supplier in this defense autonomy space.
But this kind of aggressive growth, it needs a ton of fuel. So if we shift from operations to the balance sheet, we can see where they got that runway.
They have a massive pro forma cash balance of about $840.4 million.
And that liquidity, that's really the foundation of this whole thesis, isn't it?
It is. A lot of that was raised recently, which allows them to make these aggressive acquisitions and fund this hyper-growth without worrying about cash flow right now. It's a huge buffer.
It's a competitive advantage that their smaller peers just don't have.
For sure.
But wait, hold on. We've just talked about 580% growth, but then you look at the profitability, and it's startling. A net margin around negative 402% and negative free cash flow.
Yeah.
That's a massive loss for every dollar of revenue. So as a long-term investor, why should I believe this company isn't just, burning through that cash pile with no clear path to actually sustaining itself?
And that's probably the most critical question in this whole analysis. Is all that red ink a sign of weakness, or is it a deliberate, calculated trade-off?
And the analysis suggests it's the latter.
It does. I mean, this is a classic example of a company that is prioritizing market capture and technological dominance over any kind of near-term profit.
So they're taking every dollar they earn and every dollar they raise and just pouring it right back into the engine.
Absolutely. The funds are going straight into high-growth things, intense R&D to stay ahead, and strategic M&A like that Robo-Team acquisition.
Which expanded their whole integrated platform.
Right. They're sacrificing dividends, they're sacrificing buybacks,
Yeah.
all for pure growth momentum. They're basically saying, we'll worry about profit once we've locked in our market position.
Okay, that makes the negative margin less alarming as long as they can sustain that cash cushion. And speaking of financial management, their debt seems really clean.
Very clean. A debt-to-equity ratio of 0.03 is exceptionally healthy. And they've even managed to get extensions on over $7 million in notes, so there's no immediate debt pressure.
We should probably also touch on that one accounting event that kind of jumps out.
Yeah.
The $56.6 million Q4 non-cash charge.
Right, it sounds frighteningly large.
It does.
But this was from a notes exchange. It's fundamentally an accounting event, not an operational crisis. The crucial part is it has no immediate impact on their operational cash or their ability to fund those big 2026 goals.
So the financials give them the runway. But why are they winning the race in the first place? If we connect this back to those defense orders, what makes them better than the established players?
It comes down to their competitive moat.
In defense autonomy.
Yeah, and what's fascinating is how they identified a gap in the market. Most competitors sell, a singular solution, a drone here, a radio system there.
Right.
Ondas is selling an integrated AI-powered ecosystem. They combine aerial drones, ground vehicles, and, critically, their own private wireless connectivity solution, all in one platform.
That integration is everything. If a military customer adopts this system, the costs to switch out are just astronomical.
You're building a wall around the customer.
Yeah, if they tried to swap out one piece, say, the ground vehicle, they might just break the whole communication network.
And that proprietary tech is the glue holding it all together. It's reinforced by multiple layers of IP. They have the full max SDR platform, which is a sophisticated radio system. But their biggest advantage is regulatory.
The FAA-certified Optimus system.
Exactly.
Okay, so break that down for us. What does that FAA certification, especially for BVLOS, what does that actually mean in the real world?
So think of BVLOS beyond visual line of sight as sort of the holy grail for autonomous systems.
Okay.
Drones used to need a human operator, literally within eyesight, which really limited what they could do. This certification means the Optimus system can fly miles away completely on its own.
Navigating complex areas like railroad networks or long border patrols without a spotter.
Right, and it was noted as the first small, unmanned aerial system to get this level of operational autonomy.
That is a massive regulatory barrier to entry. It basically locks out competitors who haven't spent the years and the capital to get that approval.
It makes them instantly resilient against competition from players like AeroVironment or Dragonfly in certain high-security markets.
And this advantage is only amplified by the macro environment.
Absolutely. They're perfectly positioned to capitalize on that $38 billion defense tech upswing that's happening globally and the exponential growth of the drone market in general.
And their acquisitions, RoboTeam and Apero, they weren't just bolt-ons, they were strategic.
Very strategic moves to instantly acquire proven ground autonomy tech and, more importantly, specific defense customer relationships. It just strengthens the moat even further.
So let's turn to how the market is reacting to all of this. I mean, when the underlying story clicks this hard, the stock price usually follows. And that's exactly what we saw in 2025.
It really is. The stock soared 280% and hit a 4-year high. The technical momentum is just confirming the fundamentals.
We're seeing those classic bullish structures that technical analysts love to see.
We are. The shares are consistently forming higher highs and higher lows. That signals a sustained, healthy trend, not just some volatile spike.
And for anyone watching the charts, analysts have pointed out the formation of a cup and handle pattern.
Right, a classic continuation pattern on the long-term chart. And that structure is usually seen as a consolidation period that's expected to resolve with a pretty significant upside breakout.
So it suggests the stock is just pausing before its next big move higher.
And on top of that, the stock is in a golden cross phase. This means the short-term 50-day moving average is trading above the long-term 200-day.
Which is a powerful technical signal that the momentum shift is established and sustained.
And that's what attracts the broader base of institutional buyers.
And that institutional buy-in is maybe the most compelling part of this whole technical story. This isn't just retail excitement.
Not at all. In Q3 2025, we saw massive cluster buying. I mean, the numbers here are hard to ignore. Jane Street increased its position by nearly 980%.
Wow. And Vanguard was up 110%, Morgan Stanley over 1,000%.
When that kind of sophisticated, large-scale money piles into a stock, especially after a big run-up, it's a massive validation of the growth story.
And that $110 million thesis, these firms aren't just speculating.
No, they're making a high-conviction bet that the company can execute.
And it seems like the entire analyst community is aligned. Sentiment is unanimously bullish. You've got firms like Lake Street, Needham, Oppenheimer, Stifel, all raising their targets.
They're recognizing that the old growth models just couldn't keep pace with this kind of revenue acceleration.
But as we always stress, there's no such thing as a risk-free investment, especially in a hyper-growth story like this one. We have to look at the risks, the bear case.
And there are a couple of primary short-term risks to focus on.
The first and most immediate one is dilution pressure.
I mean, yes, they have a strong cash balance, but they need to keep raising capital to meet that growth rate. And that comes from issuing shares.
We've seen some of that already, like the 2.39 million share tranche that was recently completed and other share resale filings.
And those actions can flood the market with shares, creating near-term pressure and, temporarily capping the stock price.
And the second risk goes back to that negative profitability gap we talked about.
Exactly. While we framed it as a strategic choice, the fact is the company's burning cash. Net income is around negative $38 million.
So if there are any delays in fulfilling those big defense contracts, or if the pipeline conversion slows down.
The market will punish that high cash burn rate immediately.
Okay, so if the cash burn is the potential bomb, the cash cushion is the fuse. How secure is that mitigation strategy?
It's secure enough to give them a very long leash. That robust cash balance, anywhere from $433 million to over $840 million, depending on how you calculate it, that's the primary safety net.
And the cash burn is tied to a real, visible order backlog.
That's the key. They are burning cash to fulfill high-value confirmed business. They're not just chasing speculative R&D, and that offers the market a lot of comfort.
Looking ahead then, for those of you following this story, there are several key catalysts coming up in the next few months that could really drive the stock.
For sure. The biggest near-term driver is probably the Ondas Autonomous Systems Investor Day. It's scheduled for January 16, 2026.
And this isn't just a presentation. This is where they have to lay out the roadmap.
This is where they explain how they plan to hit that massive $110 million 2026 target. Investors want to see granular details on manufacturing capacity, contract pipelines, margins.
All of it. Then we have the next earnings report in early March 2026 for Q4 2025.
Right. And consensus is already looking for Q4 revenue to exceed $15 million. That would be another impressive sequential step up.
And a good sign that the growth curve is still steep.
And finally, in a sector like defense autonomy, you always have speculative chatter.
M&A, new contracts.
Exactly. There are unconfirmed rumors about potential additional acquisitions and also follow-on defense orders. Specifically, there's chatter about a major Middle East border protection tender.
Which could lead to a whole new flood of large-scale, long-duration contracts.
It could.
So, if we synthesize everything we've talked about, Ondas Holdings is really positioned as a high beta bet on this rapidly expanding autonomous defense and industrial sector. They've got a crucial technological moat built on regulatory firsts and proprietary tech. The entire investment thesis really rests on management's ability to just flawlessly execute on that massive strategic $110 million 2026 revenue target, all while maintaining their cash cushion. This is a story of explosive growth fueled by defense contracts and overwhelming institutional conviction. If you found these insights helpful, make sure you hit that subscribe button so you don't miss our next analysis.